Welcome to another e-learning video on trial balance. This time round, we will learn how to prepare a trial balance with adjustments. To do this, we will look at a work example labeled as Jurong Supplies worksheet. Let's get started. In the first part of the question, we are asked to calculate the missing capital amount as shown by the question mark. To do this, we would first need to identify what are the nature of the balances in these ledger accounts. As per the Truncat worksheet, we would determine the normal balance of the ledger accounts by referring to the Adelic table. Let's start to classify some of these accounts right away. Cash in hand account. The cash in hand account is an asset. To increase an asset account, or rather, the balance in an asset account is normally a debit balance. Next, inventory. Inventory is an asset as well, so debit balance. Trade receivables is also an asset, debit balance. Fixtures and fittings, assets, hence debit balance. Trade payables. Payables indicate a liability account, therefore credit balance. Bank overdraft is essentially a negative cash at bank account. What it means is the business owes the bank $1,800. Another way to put it is there is a negative amount of $1,800 in the business bank account. Therefore, credit balance. Mortgage loan. Mortgage loan is a liability account, hence a credit balance. Cost of sales is an expense, hence debit balance. Carriage inwards is also an expense, therefore debit balance. Bank charges is an expense, therefore debit balance. Salaries and wages are also expense, therefore debit balance. Utilities is also an expense, debit balance. Insurance expense, as mentioned, is an expense here, therefore debit balance. Sales revenue is an income, therefore credit balance. Sales returns is a negative income account. Essentially, it's a negative sales revenue account, therefore debit balance. Rental income is an income account, credit balance. Capital has a credit balance as well, and drawings has a debit balance. After we have identified the nature of these accounts, we can then compute what are the total debits, and then we can use that amount to be the total credits as well. From there, we can find out what is the unknown capital figure. So we can actually prepare a trial balance for Jurong Supplies before all these adjustments are being made. Since the total debits have to equal the total credits, we can make use of this property to find out the unknown capital amount. The total debits is $24,200. The total credits will also be the same amount. Using this fact, we can then subtract all the other credit amounts to get our unknown capital figure. So we will take 24,200 minus of 3,500, deduct away 1,800, deduct 6,400, deduct 7,600, deduct 1,000, and we will get $3,900 for the capital amount. After we have determined what is the capital amount, we would then put it in the trial balance. This is how the trial balance for Jurong Supplies will look like before adjustments. Take note that we have the format being shown as the name of the business written right at the top, followed by the name of the statement, which is adjusted trial balance as at whatever date that's given to us. We have three broad columns, mainly the particulars column, which comprise the name of the accounts as well as all the workings for the respective adjustments that you will see later on. We will also have the debit column as well as the credit column. Let's look at the first adjustment. The business gave out $50 of samples during a roadshow. From here we can see that this is a type of advertisement that the business does in order to gain customers. We can also see that the inventory of the business has decreased. For the first adjustment, we would record it as a decrease of $50 in the inventory account. The other effect is an increment in the advertising expense account. Since we do not have an advertising expense being shown in the ledger, we would need to open it up and record it as a separate line in our trial balance. Moving on to the next adjustment, the owner contributed $2,500 into the business bank account. From the effects of transaction, you can see that the capital account is affected here, and the other account is the cash at bank account. We do not see the cash at bank account, but there is a negative cash at bank account as seen from the bank overdraft account, which means that there's a negative $1,800 in the business bank account. After this adjustment, we would add $2,500 in the business bank account. The other effect is the capital account will increase by $2,500. Moving on to the third adjustment, this is a sale of goods to a customer on credit. Recall that when there's a sale of goods to customer, there will be at least 4 accounts affected. The 4 accounts can be broadly written as the cost price adjustment, which is the $120, as well as the selling price portion, which is the $300. Locate the respective accounts which are affected and write the adjustments in the same line as the accounts. You will note that I have left some space between the original unadjusted figure and the adjustment. In your work, you do not need to leave this amount of space. The reason why I have written it quite spacedly apart is so that you can see what accounts are affected and what amounts are affected from the respective adjustments given in the question. So you can actually just place these amounts right next to the unadjusted figure and proceed from there. The fourth adjustment is a sales returns. It will be the negative of whatever you have done, or the opposite of whatever you have done from part C. However, when it comes to the selling price portion of $150, we do not subtract from the sales revenue account. Instead, when there's a sales return, we would need to record it separately in the sales return account, which is a negative sales revenue account. The reason for recording it in the sales return account is so that we can track how much the customers has returned back to the business over time. This will enable the business to study the ratios and then make decisions based on whatever findings that they have made. If everything is lumped in the sales revenue account, the business will not know how much goods has the customer returned, which could be eventually detrimental to the business. Next, the business bought furniture. One of the effects will be the furniture account or the fixtures and fittings as given in the question. We can see cash in hand account as well as a payable to woodwork. For adjustment E, the cash in hand account would decrease by $200. The fixtures and fittings, which is the furniture account, will increase by $600. There's an owing to woodwork. Since this owing is not goods related, we would record it in other payable account. Since other payable woodwork is not given in the list of questions in the list of accounts from the ledger, we would need to open this ledger account and record it as a separate line in the trial balance. The final adjustment given in this question is a payment for rent by check. In adjustment F, we can see that since the check is used to pay the rent, the amount of money in the bank account will decrease by $750. The other effect is a rental expense account. The rental expense account is not present in the list of account given, so we would need to record it as a separate line. After recording all the adjustments, we would then place a closed bracket at the end of the particular section. We will then compute the balances in the respective accounts after adjustments. For instance, the cash in hand account started out with $1,000, and after these adjustments of negative $200, there is a balance of $800 in the cash in hand account. Using the Adelic table, cash in hand is an asset. An asset has a normal debit balance. Therefore, we would place the $800 in the debit column. We will repeat the process for the rest of these accounts that is present. Pay special attention to the bank overdraft account. The bank overdraft indicates a negative amount in the cash at bank account. In order to use our calculator, which does not have a debit and credit function, we would need to understand what does bank overdraft mean, which is just a negative amount in the bank account. So to get the final adjusted amount in the cash in bank or cash at bank account, we would take negative 1,800, add 2,500, then deduct $750. The adjusted amount will be negative $50 in the bank account. A negative $50 in the bank account indicates that the business owes the bank $50, and this is a bank overdraft of $50 as shown as a $50 in the credit column. Once we have already computed the respective amounts for the accounts and placed them in the respective columns, we would then sum up the debit column. Then we will sum up all these figures in the credit column. We need to check that the total debits equal the total credits. If our total debits equal total credits, there is a high chance that the recording process is done accurately and there is no arithmetic error involved or no computation error involved. Remember, it's just a high chance. This does not mean that the trial balance is free of error or the recording process is free of error. The recording process can still or could still contain some errors, which you will learn in greater detail in chapter 17, correction of errors. But for now, this is accurate. Finally, we would tidy your work by drawing an outer box for neatness. This is how you would present your work for submission. Thanks for watching this video. You may review this video again if needed.